To the currency markets, where the Indian rupee is was trading lower for the most part of the trading session today, but came off that one-month lows after the euro strengthened ahead of the ECB meeting on Thursday. The Indian rupee has ended the day at 54.99, so well below that, slightly below that 55 mark. We have a 0.25% of an increase coming in on your screens there. Let's also get in then Mr. Satyajit Kanjilal. He is CEO of Forex with his views on the currency. Mr. Kanjilal, hi, welcome. How would you look at the Indian rupee, the kind of decline that we saw for last 3 days, and today a smart 0.5% of a recovery?
Hi, Manisha, and a very happy new year to you. Yes, of course, today was a very interesting day when we saw the rupee very weak, and there was a lot of demand for the dollar, and it seemed to be going away. But all of a sudden, we've seen the flows coming in, and apparently there were flows for FDIs from what I hear. So this was earmarked, but we didn't know exactly what time is going to happen. But if you take the FDI flows, you take the FII flows, you take other flows that are expected, there's a consensus among market thinkers that rupee may not fare too badly into January. And you know, typically what happens is when the sellers come in, the buyers move away. So you will find possibly, if the rupee dollar does go below, let's say 54.70, you will notice that you know, the buyers have all moved away. At that time, the sellers will panic and they'll sell more, and that's always the case in the case of rupee. So I wouldn't be surprised to see 54.50 in the next few sessions, or maybe early next week.
Sure. Mr. Kanjilal, two things that really have dampened much of the euphoria here. One, of course, has been the Fed statement, or the caution rather, about how further could the optimism on the quantitative easing could go. The other, of course, has been the current account deficit at around record highs. How would you read into these two things?
If you take one at a time, if you take the Fed statement, it is obvious that what they're doing is unprecedented, and you know, there will be detractors in the whole Fed committee who will think otherwise. But it's a general thing. I mean, I don't think we can read too much into it. They don't have too much room to maneuver right now, and so therefore they are going on with this bond purchases, treasury bill purchases, quantum of $75 billion almost per month. I think this will continue into 2013, well into 2013, and maybe spill over into 2014. So it's not something that's going to happen a week or 10 days later. But markets have a tendency to react, and which they have. And slowly you have noticed that after the event, since Thursday, last week it happened, you've seen things have been panning out differently and markets have become steadier. Then you see about the Indian situation, about current account. Of course, this is quite shocking, and it's being factored in, and you know, all the estimates have been brought lower because of that. But having said that, that negative background has always been there, give or take a few $1,000 million. But overall, that negative sentiment is going to be there. But what is going to be the driver is going to be the flows, as I mentioned earlier, and which is a typical thing in the Indian market, really. And for that, I think one has to look at the immediate situation rather than the long-term situation. Things can change very quickly in India, as we have seen.
Always, yes. Vijay, getting you in the conversation as well. The global markets are very flat, whether it's the euro or the dollar index at this point in time. But the rupee, 0.5% of a recovery. How is it looking on charts for tomorrow now?
Manisha, the 55.50 is a threshold. That's a make or break for the USD INR, and it's not surprising that the USD attempted unsuccessfully rather, to go past that ceiling. I would think that the downsides would be up to, I'm talking of the spot now, 54.75, maybe, give or take 10 paisa here and there. That's where the USD INR will get support, and from there it could probably try and attempt another upthrust. Now, going past the 55.5 may not really be a very clean and a single move kind of a upthrust, because over there's a lot of selling and overhead supply coming in. But I think the room for appreciation in the rupee in the coming 1 or 2 trading sessions is limited up to 54.75, maybe 54.60.
Final question, Mr. Kanjilal, and how would you look at the interest rate scenario, especially coming in India, and how much of an impact do you think that can make on the currency?
Well, the markets are looking at some kind of a cut sooner than later. It's been on the anvil for some time. RBI has taken up the case for inflation for a long time. But markets are looking at a 0.25% cut, if you ask me. And a cut will be good for the rupee, I think, because it will boost the stock markets, it will boost the bond and treasury bill market, so, and in fact even the corporate bond market. So therefore, if the rate cut does not come, it will be a negative for the rupee.